minutes from December.
I have one comment, and the comment is, I'd like to see the formal minutes be a good summary. And it says, here's the minutes, and here's a summary, and it's what we discussed. What are the issues that remain? What are the action steps, period? And then I'm trying to shorten the minutes a bit as much as I can. These are coming close, but I think we can do a little more to tweak them, because sometimes our minutes, you end up reading 12 pages of minutes, and we can't remember it. We can remember the key stuff. Other
Well,
than that,
we do a report out to the executive committee. I'm not sure if that was distributed or not, but we do, when I do the minutes, I do a full version and a report to the executive committee.
I thought you had stopped doing that, Joel. You're still doing that? I don't.
Yeah, I'm still doing it. I'm not sure if it was distributed or not, but I'm still doing it.
So I'm wondering if we can just do one set of minutes, and a more summarized set of minutes, one set of minutes that goes to this committee and then is used to report out. Does that work?
Sam, Jenny?
Less is more.
Michael?
Yep.
Yeah. I
That's
think
No
fine.
problem with that.
that would be great.
Yeah.
But Jenny, I didn't hear you.
I said that works for me. That'd be great.
Okay.
Yeah, that would be terrific. Okay, and I have some very minor corrections I'm giving to Stacy. So if you want to know what they are, that's fine, but they're really minor. Other than that, may I have a motion to approve the minutes?
So, moved, but and then a question, are the follow-up action items are gonna, I mean, it looks like most of them have already been done, but are they gonna be covered as we move through the rest of the presentation?
Well, let's not. Okay, let's go through them. I think they were all covered one way or the other.
Well, maybe we approve the minutes if that's what we said, but then I still want to make sure.
Right, okay, so the finance committee will discuss swaps. I believe that happened. Action item is the sports work audit report. I don't think we ever received.
No, yeah, I would agree, I didn't see
The
that.
one from June 30th.
I sent the single audit.
You did? I don't remember it.
Yeah,
Okay.
to you. I don't think I sent it to the whole committee, and I can definitely, from last year, we're still
Right,
working
no,
on the
no,
single
the
audit
June
for
30th,
this
the
year.
June 30th, 20.
So I can send it to the whole committee.
Okay, that would be great. That was an action item. The full audit report, the audit report that we approved at the last meeting was sent to the board. That was another action item. I think this is.
Staff will send the job descriptions, which
Right,
we're gonna
yeah.
cover here today.
Right.
Right,
The agency-wide risk assessment, that is on our agenda at the end of the agenda for today to talk about the risk assessment framework.
And also, well, the agenda items a little broader than that, but yes. So I think we have covered, to answer your question.
all right, thank you, but
Covered
move,
all the
to,
action items one way or another.
okay, move for approval. I move,
Thank you, Sam. Second? Michael, thank you.
Okay, great. Hey, Joel, do you mind pulling up the agenda? Joel has to drive with all the
Okay.
documents today. Thank you.
Okay, well, Joel's pulling up the agenda.
Okay. Do you see that now?
Yeah.
We talked about looking at the financials in more depth or more often than just once a year after the audit has been completed. So Stacy and staff have completed a 6-month review, a 6-month gap income statement and balance sheet. So Stacy, do you mind walking us through it?
Great.
Thank
Joel,
you.
could you start with the balance sheet, Joel?
Okay. Okay, got it?
Great, thank you. So, here is our unaudited December 31st balance sheet. The team has been working extremely hard to get us caught up. We are from a monthly close, we are closed through January, and we'll finalize February this week, so we are back to closing on a monthly basis,
Thank
having
you.
results available. What I report out, just so I know everybody knows this, but when we look at our budget and how we're doing versus budget, it is not versus our GAAP financials, but versus our cash books, which is a requirement from the Federation. And in those cash books, we have things like principal payments and other cash items that are balance sheet items, but are reflected in what we call the cash book. So what I'm reporting out on a monthly basis, quarterly basis to the exec committee board are our cash books. And I say that because there's not when we look at the income statement on the GAAP side, there is not a budget to compare to. So we're going to look at the balance sheet compared to year end June, and then the income statement compared to 6 months last year, 6 months this year. So we're caught up from a reporting standpoint. We are still finalizing and working through some of our balance sheet recs as of December 31st. We're through most of the recs. We have more work to do. We're getting caught up there on the reconciliation side too. But what I'd like to focus on here are just the major changes that are not, standard, going through the year balance sheet adjustments. Starting with cash, if we look at our cash position, at the end of December, we have $1.7 million in cash. Sam and I have talked about cutting that a lot closer to $1.7 million. If you look at cash at any point in time, I mean, we had cash set up, I'm sure, with that to handle the payroll that was happening in the next few days, and accounts payable. We run that once a week. We'd like to, now that hopefully we have a better process with JP manage our cash a little tighter. If we look at our cash position today, by the end of this week, it'll probably be a $300,000 balance. There's been a lot of back and forth with JP around, I think we have a right signature set up, but we don't have a smooth process where we click a button and get our working capital line drawn down and move back up. So we do give it, we have a little bit of cushion we can certainly work on, and we are working on having less cushion, so we're really managing that line tightly. The only reason we have the line right now and are using the line is because of the delayed payments from the claims conference and related to HCS. And I have a whole separate page on that. So I think if you don't mind, we can save that discussion when we get to the cash flow.
Sounds good. Thank you.
The rent grant and receivables, that has changed $1 million, ended the year at $5.9 million. In that 5.9 million was our one ERC credit of over $3 million. We had one in a receivable balance as of end of June. We received that in July. So the 5.9 came down by $3 million and then went back up due to the HCS and the receivable balance growing from HCS and claims conference. What? Michael?
Yeah, quick question on cash. JP Morgan Chase, I guess, has our business. Have we, Stacy, you're new, so I don't know that you've done this or when the last time we did it. Have we looked at who is our main bank and what we're getting from them for the fees we pay?
So I have talked to the Federation about JP Morgan about a month ago, gave them our feedback. Difficult to work with, slow responses, a lot of manual, it seems like, not picking up the phone and saying, oh, that didn't go through. Like, it is just all this back and forth, and Elaine and Monica deal more with that. So I gave them the feedback about a month ago, and they were meeting, the Federation was meeting with JP Morgan and giving them collectively all of our feedback. So I don't know how, I think that meeting probably just happened and I can circle back with them. But I mean, we had to call them and say, oh, interest rates are up. How come we're not getting any interest? Oh yeah, well, you need to switch to this. Okay, great, let's do that. And it didn't matter for years because we were either at a zero position or interest rates were so low. But it's just, and I know the Federation has frustrations too. So I will circle back and see how that discussion went. If nothing else, it should step up how they're servicing our accounts.
Is this a situation where we use JP Morgan Chase because Federation has
Yes.
decided that's the bank we're all gonna use?
Yes. And I
Okay,
think, they've got a lot bigger balances than we do.
Yeah.
My guess is it should benefit us.
yeah,
I think it's more from a service perspective, that's been frustrating.
okay, yeah, that's what I was trying to get at. Okay, well, hopefully they'll start, they have nothing to lose by sitting down and pushing JP Morgan Chase to do more.
Nothing.
There's nothing to lose there, and if they're not providing service and they're carrying these balances, they're making a decent amount of money off us. Okay,
For
thank
sure.
you.
AC, I guess one other comment there for the Federation or somebody, I know, I believe there's already some relationship that Federation has with Wintrust. And, they're a local, they're the largest, regional bank, and they're really good at service-oriented mentality. So I don't know if that can be kind of some kind of follow-up comment to Bose or other people as to whether they're might want to look at other sources.
I
Yeah.
love Wintrust. When I was at the Children's Museum, we switched banks and I did a somebody else had just done a survey with the nonprofit CFOs in Chicago and said, who do you like to bank with? And overwhelmingly it was Wintrust. So, and I know Candace there and she has a relationship with the Federation. I can certainly follow up on that. They just have a different level of customer service. They're more designed, and especially if you're in Chicago. So it's
Could not agree with you more. So, and I, I know the Wintrust people really well. I'm on the board of one of the charter banks, and it may be worth at least mentioning.
Great.
They were a recipient of a humanitarian award last night from the Holocaust Museum too, and they talked about all the things Wintrust does to support the Holocaust Museum and the Jewish community. So there is some recognition in the community of Wintrust's value to the Jewish community. So that might be interesting.
There you go. Okay.
great. I will follow up. Okay, back to the balance sheet. The next big variance is on our endowment line. It looks like it's going down $421,000, and that is because we received statements late from the Federation. So we are now caught up through January and December and January. And when you now look at our balances year over year, it's up almost $500,000, and that's due to our investment. So that's a timing issue. The land, buildings, and equipment up $700,000 year end June. That is the completion of the Weinberg lobby that was in progress as of June 30th, 2023. That's now complete. And then we've redone the roofs at Swartzberg and Robino. So those are the big, all of that was in our budget for our capital budget for this year. Any other questions on the assets? Assets up $2.5 million once the endowment entry is done, or it is done. If we look at our other accrued liabilities, this is just the $2.1 million. It's normal activity for us. A lot of this is the change in payroll accrual, and that all depends on how many days you had to accrue at the end of June versus December. And then any change in deferred revenue. So that would be related to any of our grants and HCS. When we get the payments, we set those up in deferred revenue and recognize them over the grant period. So all of that is just normal timing and accounting for our grants and payroll. The swap liability is still on our books as of December. We extinguished that at the end of January. So that liability will be gone when we look at the March 31st financials.
You say the March 31st?
Yeah, we'll look at it. That's a
Okay.
quarterly balance sheet review.
Oh,
Yeah.
well, quarterly, okay, got it. We still have a relationship where that
Gone.
totally gone,
3 swaps gone.
okay.
Hallelujah.
Yes.
Due to JFMC Facilities Corp., this is the Carmel debt. Again, this is ended December. It does not yet reflect because we just extinguished that debt, $3 million as of February 1st. So when, again, we look at the financials at the end of March, that $3 million will be gone and our Carmel outstanding debt will have gone from almost $11 million down to $7 million. They were very happy about that, by the way.
Oh,
I
they're
had lunch
very,
with Boaz, and I mean, he is very much focused on reducing debt for the agency and for the Federation. So I think we're all happy about that.
he was employee of the year or something, one of those employee awards, and one part of it was his focus on reducing debt.
Oh,
And I
really?
just, yeah, and just one thing, every penny we get, he wants us to reduce debt. Stacy, you've probably seen some of it. And sometimes we've pushed back pretty firmly a couple times at him. You know, he wields a big stick, but I find that we have a chainsaw sometimes that will knock that stick down a bit. So
Okay, great.
so if you start becoming concerned about what he's pushing us to do, sometimes when we get extraordinary receipts, you know that the board has watched it and the board has been very supportive of pushing back at him if we think he's doing things that are detrimental to us in the long term.
Great, that's good to know. Loans payable, $1 million. The swing on that is really related to our working capital line, and we are going to manage that back to zero by the end of the working capital line by the end of the year. We'll talk about that when we look at the supplemental pages. And everything else here is normal business activity.
Questions, anyone? For Stacy?
No, covering the big, no.
Looks good to see this.
Great.
Love seeing a gap statement.
Yeah, it makes it complicated when we've got the cash.
It does. No, when you're not used to it.
Yeah. Okay, looking at the income statement, and again, this is where the income statement does not have a budget because the budget resides in Galaxy on the cash books. But this is looking at 6 months of activity, 2022 to 2023. We reviewed the cash books at our last board meeting, and we're $400,000 favorable to budget. So, I mean, some of these variances look odd, but the budget was not based on, for example, Celebrate CJE 2022. We had a really high budget because it was the big year celebration. So our budget was down, which you're not going to see reflected here. So again, we're on budget for the year. We've talked about the full year. We think there's more upside than downside in terms of risk for the year. We feel good about where we're ending fiscal year 24 from an income statement perspective. That being said, there are variances because one, the budget was built in all these changes. And if we look at 2023 versus 22, and I'm looking at total public support, looks like it's going down from 6.8 to 5.3. It's not looks, it is. And a big piece of that is Celebrate CJE, the special events line. We won't book that. We've booked that all in January because we're still getting donations through January. So once that is trued up, that will be the biggest variance that goes away there.
And roughly what is that number?
800,000.
800,000 in total.
Okay.
Yeah.
So, yeah.
Yep. So that will go up from the 300 here, Sam.
Yeah, thank you.
Grant revenue, if we look at grant revenue, I think the biggest change here is the increase in the HCS program. So that program has grown every year significantly. It was 14 million in 2022, growing to 17 million in 23, going to 20 million in 24, fifth calendar year. So the big increase here is related to HCS. The program service fees, most of that is the rent that we receive at Weinberg and affordable housing. And both of those had rent increases in 22 going to 23, as we have every year. So most of that is related to rent increase, monthly rates going up. The
It's
employee
that,
protection, sorry, go ahead.
it's that in census too is higher, right? So that would
Yes.
drive
Yep,
that.
great. You are so right, especially at Weinberg, right? Affordable housing, not so much, but Weinberg, I don't even know what the sense is, how many openings were at the end of December 22. But census is up significantly and now we have a wait list.
Was there a reaction to the rent increase? Did anybody leave because of it?
No,
Great.
no.
Good.
There was a reaction at Tamarisk,
Oh.
but Tamarisk is yeah, but not, Weinberg was a
Definitely.
5% increase and Tamarisk was a bigger increase, so we had to work through that.
Mhm.
But nobody left at Tamarisk either.
Okay, great. Thank you.
The employee retention credit, we didn't have anything in 22, and then in December of 23, we had $2.7 million. Or it says 2023, I'm getting fiscal year, and because we booked $2.7 million net of fees in the September timeframe. So it's really business. I mean, once we catch up on Celebrate CJE, and we've had increases in the HCS program and our on the rent and the I'm looking, unless any questions on revenue, I'm going down to expenses. And I mean, I think overall our expenses are up. A big portion of that, well, if we look at salaries and benefits, they're up with not so much FTE going up, because I think our FTE is pretty flat year over year, but salary increases that were put in place or salary adjustments. Obviously benefits costs going up with that's an increase every year on healthcare costs. And the big ones, if you look at the increase in supplies and professional fees, a lot of that is related to the HCS program. So you see it's a pass-through program. See the revenue going up and the expenses going up to offset that. Because it nets to zero at the end of every period.
So that's in supplies and part of that is in supplies and other?
So some of that is in supplies and others. And I can't tell you how much, Michael, I was looking at that last night. And again, it's looking at the categories in a different way than the budget. So I can get back on that because I didn't have, some of that was HCS, not all of it. Professional fees would also include Salesforce and the payments that we made with Salesforce year over year. I can get you a more detailed explanation.
Okay, thanks.
Basically, where would we be showing it with where would we be showing if we still had to use a lot of outside resources for staffing shortages?
It would be in that line, Sam.
Yeah.
And we really started cutting back. That could be some of the increase too, because I feel like that was, it was before my time, but I know it was still going on in January 2023. Like we were still using a lot more contract services as we were staffing up. So that definitely is part of that increase too. But that's really come down a lot and will be coming down. So that's what, I think those are the big variances. And again, income statement versus budget, we're in great shape. There's some ins and outs. We've talked about those. There's always ins and outs, but overall, we should be in really good shape to the end of the year in June with discussions about what can we do with the surplus, which is always a good conversation to have.
Stacy, what's in endowment expenses?
Expenses, 989 going down to, is that just, no, that's interest is above there.
I don't know what the,
We're gonna open that, I think.
can't figure out what it is.
The way NXT reports the account. Let me see if I have that. How about we keep going and I'll put it in the chat, Michael?
Yeah, that's fine, or just get back to us, but that one, I just don't understand what it is.
Yeah.
I'm sure when we find it, we'll go, oh yeah, that's it, but. I
Yeah,
can't
and
remember
that's
what
why
it
it's
is.
called that, right?
Okay,
And what's sitting in miscellaneous? Just obviously miscellaneous, but
I can get back to you on that too. I mean, it's probably a million things. I'm just
Yeah.
looking at the other big accounts, Jenny.
And maybe the same
But-
question about miscellaneous revenue that wasn't in 2022, the 241.
I think that's Tamara's, but I can confirm that too. So we need to get back on endowment expenses, miscellaneous expense, miscellaneous revenue.
Right, okay. Thank you.
Thank you.
sorry, one more question as I was just thinking about it. I know the expense for employee health and retirement benefits obviously increased, and that's pretty common year over year. Have you guys shopped that at all, or is there, you know, a thought to do that, or is it we're happy with the
Well, I think it's all, I mean, it's all done through the Federation, Jenny, so it is
Oh,
a good question. I haven't been through that process yet. It's coming.
okay.
No, when do we get the assumptions? In June? Are they, do you know? Are they negotiating that? I think it's coming up this spring. But it's gonna be, I mean, they really manage that on our behalf.
Okay.
Jenny, there's a bunch of stuff where that's the answer. And
Okay.
sometimes we look at it and are like, we could do this differently, but we don't have the option, so.
And by differently, you mean better, right? I'm kidding.
Yes. Well, we think we could. Well, again, I think I think the big difference is, I think we'd shop the stuff more.
Yeah.
I think Federation has relationships and they tend to maintain the relationships, and we've, at least since I've been on the boards, a lot of times you go, do we ever shop that? And the answer is always, well, that's Federation and we can't do it.
And I
really.
guess they do get economies of scale given, you
Yeah.
know, a larger group, but yeah, okay, thanks, that was helpful.
Okay, yeah,
Would you like to continue?
I would like to continue. I was
Yeah.
gonna,
I'm losing my voice here, sorry.
Joel, if you could pull up, yes, thank you,
I
Joel.
read your mind.
Oh, I don't know, oh, there we are.
You got
I
it.
love these 2 pages. This made
you,
my
Michael.
day when I saw this. It was like, for this page is good. The second page, just it was sort of like I was blind and I got my first pair of glasses.
Well, it really does lay out why we're in this position. Which puts a lot of stress on us managing within this
Mhm.
working capital line when we're waiting for the claims conference to pay us $10 million, right? That's, you know, some of that is expenses relating back to October. So it is this point of stress. It's why we have the line. We did increase the line from, it will go up to $10 million on Friday. It can't happen soon enough. But we can start with, what's the first page? Okay, Joel, thank you. So this is something that Sylvia asked to put together, and I do think it gives a good snapshot over the last 3 years of our revenue and expenses and how they've changed. I just highlighted some of the big items, right? The sale of Lieberman was the biggest one starting at the beginning of the chart. And then 22 to 24, I mean, so much of the noise in here is related to the HCS program. And again, that's a pass-through program. So our revenue and expenses go up accordingly. You can see the blue in June. Well, you see it in 2022 coming down. So in June is when we're looking at our surplus and figuring out how much can we set aside for replacement reserves. And we do that every year. I think it will be a conversation this year about hopefully we're in a surplus position as we talked about and how we want to handle that surplus.
Thank you very much for doing this.
You're welcome.
this stuff is so helpful.
I mean, it's a great, it speaks volumes.
Great. Okay, if we want to go to the next page, this is an interesting, this is how we're looking at our cash position, our operating cash and our working capital line balance. And again, we wouldn't have to use this line much if it weren't for the, now we're in a position where we wouldn't have to use it much except for the HCS program. So the top portion looks at our cash by month, and you can see at the end of February, we're gonna have a few $100,000 in cash. Going into March, you know, we get our monthly revenue or quarterly revenue if it's endowment. And then we are waiting for $10 million from the claims conference. And there is nothing we can do. There is reporting that needs to be done, and we, you know, that's all ready to go. So, you know, this hopefully comes in the month of March. I've asked for a date, and they said we're waiting, you know, it's a negotiation with the German government. So the last couple of years, we've received that in March. So we are anxiously awaiting on that.
And
All
that
right,
is, Stacy,
Yep,
Stacy, that amount we are hoping to receive in March covers 2 quarters, right?
it
It's the
covers
last,
some of fourth quarter,
right,
some of
And then-
it covers all of first quarter of this year, first calendar quarter.
yeah,
And then it's the advance payment for the second quarter.
wait, it's got
Three,
it has the 4th quarter in it?
a third, kind of a third of the fourth
Oh, a
quarter.
third of the 4th, okay. So,
First quarter, full first quarter, and advancement of the full second quarter.
So is the 4.3 in June the advancement for the third quarter?
Yeah,
Thank you.
yes.
perfect. This is so helpful.
So by the end of June, you know, this is where we're gonna, you know, we'd like to operate within a couple $100,000 of cash. It doesn't make sense for us to be sitting on cash and paying on our working capital line, but we just need to get Sam and I talked about this last week. I want to make sure we've got a real button-up process with JP Morgan. I mean, we are tracking cash on a daily basis. This team is looking at our float on a day, like we know exactly where we are every day. I just, I don't have a lot of confidence that if we want to draw it down on the same day or the next day, we're gonna get. And we'll work with them.
Yeah,
And then you can see the working capital line by the end of June, we should be at a 0 balance on the working capital line with a little bit of cash. And our budget for fiscal year 24 assumed we'd have $5 million outstanding every day. It was just a flat assumption. So we're
Could
gonna,
you repeat that, please?
the budget for
Yeah.
fiscal year 24
Mhm.
that was done, almost a year
Oh,
ago
the
was
budget,
flat
the
every
budget,
day.
the
The
budget.
budget, yeah.
Thank you.
So as we go through the fiscal year 25 budget, which we're just starting to work on. Obviously, we're gonna see a lot of savings here that we had to spend some cash, right? To pay down the debt and get rid of the swaps, but that's gonna all end up in savings when we look at the fiscal year 25 budget. Savings and interest expense, we always assume between $150,000 and $600,000 a year for the cost of the swaps, so that's gonna be gone. So all that will get factored into next year's budget.
why we did it.
Yep. Why we did it. Any questions?
You did a terrific job. Thank you.
But it's thanks to my team.
Thank you
too.
all,
Thanks
yes.
to the team.
The one
Good
thing that I
information.
tried to figure out as I went through this, Stacy, is I'm trying, and this may actually bleed more into Sam's committee than this committee, the finance committee, is looking at the increase in expenses. And when I go back to the P&L and I look at just salaries, employee benefits, payroll taxes, professional fees and supplies, they're up $2.8 million year to year for a 6-month period. And what I'm trying to get my head around I think this is more a follow-up than a for today is, what does that mean going forward in terms of our ability to fund the principal payments we need to make and the capital expenditures we need to make? I did this quick and dirty where I looked at revenue over expenses for the 6 months ended December 31, 23. And then I looked, and that was 2.7 million. I said, well, the ERC shouldn't be in there. I'm going to pull that out. It's an extraordinary item. It says revenue over expenses is basically zero. And then we have to fund capital and principal payments. Now, part of that is can come out of CJE, which isn't booked into January. But I think one thing I'd like to try to understand better is, with those expense increases and less of an ability to move revenue up to cover it, what's the implication for us in terms of being able to fund year to year without having to dip into ERC funds to cover operations or the line of credit? And again, I think it's more, Sam, I think it's more something that the finance committee would, and it's probably a budget question.
I think it is, and then we've got favorability that's gonna happen, right, starting with our interest expense, and so I think it is a budget conversation, and our increases this year for the union contract were 5%, next year they're 3%. So there are some things that, I don't know what healthcare looks like, but I think that is the question for the budget process is. How do we pay for our existing costs and then figure out, we'd like to grow from where we're at today.
Right. And again, we've got the ERC, and part of the ERC can be helping us fund growth. That's fine. And even some of the ERC we use to pay down the line, we might want to reclaim for growth later if it's important. But making sure, just again, getting that understanding of how do we fund all the things we want to do. So again, it's a budget question, but I spent a long time like playing with these numbers, trying to get at it, and I don't have enough information here other than to be dangerous and have a question to ask. But yeah, Sam, you and Sam can figure out how you want to cover this. And I think it's something that needs to be clarified for the management team there too, just to say, listen, this is what it's telling us. And if we're going to have to invest in growth, there's one scenario I saw said that the hub will cost us $1 million next year. And I don't know how to fund it. So again, when you get to the budget, that's the perfect time to start looking at it. It may be when we do the budget, we want to extrapolate out a year or two, because I do want to make sure the management team has front and center. Here's what's about to happen to us, and is thinking about it now. We tend to sometimes hear it and then just sort of wait a bit before we get into it. I think with where the hub's going, where the other programs that BCG surfaced came up with, some of the other things we're looking at, we need to give a good forward look and force the conversation on how do we fund this? How much do we have to increase our fundraising targets? Do we have to monetize some of the services we have? How much more can we get out of efficiency? Those are the things Jody had talked about, but I will stop here.
Well, I second Stacy and I both second the observation. The one thing we have to make sure when we look at the budget, it'll look at it a little differently, because I think these statements we're looking at now may have a little distortions based on the claims conference revenues and expenses. Sometimes it creates a little bit of a noise here, but that part will be flushed out when we do the budget.
The budget goes to the finance committee, correct? But to no other committee?
The budget, it's the finance, yes. Yes.
Okay.
Finance/exec, it's a combined meeting,
Oh, I forgot that. Thank you.
and then goes to the board
Mm-hmm.
a couple weeks later. Our goal is to have the budget package done, wrapped up before the 4th of July week. Well, it has to be, because that would give then the committees just a week to review it, including the holiday. So it would be the end of June. Okay,
Any, you have more?
no, we gave
No, I-
45 minutes for that. 9:44.
I love good planning. Thank you.
That was luck, luck for me, planning on you.
No, you made it happen. Okay, thank you. Are there any more questions for Stacy? Okay, Joel, you're on for your
Okay.
internal audit update.
All right. Okay, thank you very much. Appreciate, as always, the opportunity to update the committee on internal audit. I'm not going to go through the detailed reports. You received the detailed reports in this packet. This will just be kind of a high-level summary, if that's okay, of the major activities of internal audit. And of course, if you have any questions, just shout out and let me know. As you know, I split my half-time, part-time position between internal audit and coordinating several of the CJE financial assistant programs, which are Weinberg, Robino, and ADS. So half my time is with internal audit, half of it is with the financial assistant program. The last internal audit report was in June of 2023. So this report really covers the last 9 months. As you remember, we didn't do any updates in the December meeting, so we deferred it till February here. But going back over the past 9 months, internal auditing has been impacted with more time needed for the annual year-end close and the RSM audit. So from July 15th to November 15th, about 12 hours a week, I spent on the year-end close and the audit. I reviewed all the year-end balance sheet accounts, which to ensure they tie to the general ledger. And I must say that the county did an outstanding job in getting everything ready for the audit in terms of making sure everything was reconciled when they came in. During the audit, I participated with the financial staff team in gathering, reviewing, and assisting on audit requests and helping to coordinate the open audit requests and working with staff to complete and follow up with the voluminous RSM audit requests, which came hot and heavy in the months of September and October. But this, if you have any questions, just shout out. The internal audit plan, which was included in the package here.
Hey, Joel, can I ask
Yes.
a quick question? And I apologize for any questions. This is my first time through
Fine.
the full process, so some of these might be just getting me baselines. But in terms of your participation in the audit and, you know, kind of doing the reconciliations prior to closing the books,
I
is
didn't, just
that,
to clarify,
Yep.
I did not do the reconciliations. I just reviewed the reconciliations just to make sure that everything was tied out. And if I had any questions, the accounting team went back and documented whatever and made sure that all the entries were made, et cetera. So, I'm sorry. So I just want to clarify, I didn't do the reconciliations.
okay, got it. Good clarification. Is that really just so that once we hand things over to RSM, it's, you know, we have confidence in the, you know, cleanliness of it and, you know, in order to reduce any back and forth or questions from them?
No, of course. And, you know, in prior years, you know, there was a changeover in staff over the past year. And I know Stacy reviewed it as well. And we just wanted to kind of make sure that everything was, you know, that there was no loose ends, so to speak. So I had not done this to the degree in prior years that I did this past audit.
Okay,
So we just, you know, we just felt it was important this year because of, you know, everybody was new accounting staff, and it was good to have another pair of eyes look at everything as well.
got it. Okay, thank you. That's helpful information.
As I was saying, the internal audit plan, which I developed with Stacy over the in July, which was included in the materials, we're pretty much on target with everything. And so outside of the internal audit, of the external audit work that I did, I spent about an average of 6 hours a week on the regular internal audit activities. So I'm going to just go through the highlights in the different areas that I worked in. The first area was review of the Weinberg lease renewal process, which I've done for off and on in the past several years. But one of the things that I wanted to do here was just to make sure that we had lease addendums for all Weinberg residents, and everything was up to date in terms of the certifications and the physician certs, et cetera. So there was a few outstanding family member sign-offs that were still needed, and there were some recommendations were made to improve the process. One of which was to keep a log of all the open items, which the leasing department has now done. Basically, you know, when I looked at it, everything was basically completed. So the process is working well, and then there's interaction between the billing department and the lease department at Weinberg. So that's something we probably don't have to repeat every year, but it's good to periodically to review this. The next item is the Weinberg monthly pre-billing. This is done to ensure that all funding sources, which there are many state funding, scholarships, private pay, all charges are entered correctly. So we have a big spreadsheet that I review on a monthly basis in terms of all the funding sources. So this has cut down any errors that potentially could happen. And it's really done to just ensure that charges are reflected correctly for the residents on their billing statement. So I do this monthly. We've trained Joe Ellen as well, who's the billing manager, to do this as well. So the next item is petty cash. This is required by RSM at June 30th. They look at our petty cash. We only have a couple $1,000s in petty cash, but we've been consistently lowering the petty cash banks if they're not being used. So we go through and make sure that the procedures are being followed and the reimbursements are taking place on a regular basis. I took a look at the Court of Claims, and you know, we had a major payment in June of 2023 of $290,000. So all the back Court of Claims, which had been for many years, had been finally paid off. At this time, there's no outstanding claims, and that's to the work of the billing department and making sure that it doesn't go to Court of Claims. So, I mean, if we don't get payment from the state for a year, we can file the claims with what they call the Court of Claims, and then it takes several years for them to review the documentation. But as of this time, there's no outstanding claims, and everything has been paid. Weinberg personal care charges. I look at, we have some reports that compare actual versus scheduled services. So we make sure that all personal care charges that could be billed are billed. Additionally, the manager looks at these reports as well. So I periodically review them as well to make sure it's being done. I also look at state-funded residents who receive a significant amount of services. Because some of them could be in Gidwitz Plus, and Stacy and I review that with Jen Weininger every month, and from this, we've been able to determine that some residents who are on state funding should be in the Gidwitz Plus program.
Joel,
Yes.
on the detailed sheet, you say that the impact of, I guess, not having added the charges is about $60,000 per year. Is this the item we're talking about?
I'm sorry, which item? Or what's the
The
60?
Gidwitz Plus, the detailed sheet says that there's about, looks like $60,000.
Oh, yes. Correct.
This is the item.
Correct.
Do we?
Well, some of these people should be, we're working to get them on Gidwitz Plus. Let me just try and explain. If someone's on state funding and they have a la carte services, we can't charge for it, but just because of the way our Gidwitz program is set up, if they're on Gidwitz Plus, we can charge for them. So we do have some people on Gidwitz, on state funding who are on Gidwitz Plus. So, but when they have a lot of services, these services, which could be bathing, it could be spot checks, escort services, they, we look at them and see if we try to put them on Gidwitz Plus. Now, some of these people also are on scholarship, JET scholarship, and they would get a portion of that reimbursed through the JET program. So this is something that we try to monitor and talk to Jennifer that they should be on, when we think they should be on Gidwitz Plus, and then she talks to the family and we determine, and she determines, basically that they should be on Gidwitz Plus or not. So we identify the people and she reviews them, and we can put them, we can recommend, and we do have people that are on state funding who are on Gidwitz Plus. So yes, that $60,000 is potentially what we could get for if these people were on Gidwitz Plus.
It's just that 60,000 is based on the 4 people that.
Yeah, well, it's 4 or 5 people now, correct.
Okay,
Right.
so is this something that you get some kind of update from Jenny as to whether you?
Well, we try and review this now at our monthly collection meetings, and just go over the status of some of these people. Yes. Now, some of these people have been in the facility for many years. So it's kind of have to grandfather them. It's kind of difficult if they don't have sufficient funds. Even with JET, they may have a very difficult time paying for Gidwitz Plus. So we have a few people in that category that we're just not going to be able to put on Gidwitz Plus because they've been in the facility for so long. But the whole goal of this is to identify these people up front,
Right.
so that we can put them on Gidwitz Plus, and not after 2 or 3 years.
Okay.
Okay, moving on, catering and Weinberg. We began resuming charging for internal transfers. It was internal costing between departments. When Morrison left in 2022, they had kind of got lost in the transition, but we started to resume interdepartmental charging for catering at Weinberg, which is, events or parties that they might have, or mostly activity kinds of things. So Morrison had a program that they used to do the charging. So we had a template for costing and charging this out, and we kind of reinstituted that. And basically, we've been summarizing the recommendation was to summarize the departmental, internal and external catering charges, and then go through charging the departments, which we have begun. And we are doing that since July. As far as external catering, these are high school lunches, high school catering, as well as private catering events. We were working with Monica, we reinstituted the costing for fiscal 24 and ADS lunches, which hadn't been charged out. We started a catering log to make sure all events are billed and paid for. And we believe we have good control now of all the catering activity that's going on at Weinberg. Moving on. Any other questions so far? I'll move on to 1099. In January, I review all the 1099s just to ensure that those that should get one did receive one, and those that did not get them should not get them. And those that did get them or should not get them. So one of the things that came up was about legal settlements. And did some research, and we verified with RSM in terms of, we had a number of legal settlements this past year, but the end result was if the checks are issued to the claimant and law firm, the law firm should receive a 1099 for the total amount. So of course, if there's a sickness or personal injury settlement and the check is made out to the claimant, that's not reportable. So we kind of clarified the rules, and I think we've got a good handle now on those issues that come up with legal settlements. One of the other reviews that I do every year is, we call it actual versus scheduled hours for PTO, is we make sure that at the end of the year that the staff who should qualify for PTO are working the required number of hours. So there was a number of questions we had, and with HR, and after their review, we found about 5 staff who need to be reclassified as far as their FTEs. In 2024, everybody's going to accrue PTO as well as sick. But we want to make sure people are in the right FTE status. So this review basically ensures that people are, especially if they're classified as part-time or full-time, that if they're working the required hours, then that they're in the required, that they're in the correct FTE position, which also is helpful for budget time. When I go through the internal audit programs, I update my procedures and programs, so that's been completed. And the couple of open items that I have here is basically is probably more number 2 protocols. I still would like to see, we have some protocols when state funded residents are put on GidWits Plus. And we need to put that in writing and basically follow up with them in terms of putting them on GidWits Plus. And then for lease renewal, some of our policies and procedures need to be updated. So with that, it's pretty much my report. So if you have any questions on any of the audits, but the work plan that I'll make this a little smaller. But anyways, we have the work plan, and essentially I go over this with Stacy during the year if there's anything that needs to be done. But this is kind of, and it's adjusted accordingly. But as you can see, outside of the external audit, 6 hours a week is basically all the time right now that's being devoted to these activities in internal audit, and which is why we want to hire an internal audit or to expand the program, which would also include corporate compliance and risk management items. So
couple questions, and again, my apologies for just getting my feet under me with the overall program. But in looking at a lot of the things, Joel, which you do a lot of things throughout the year, a lot of these appear to be kind of annual or like ongoing things that I would kind of almost consider continuous monitoring, or things that, you do year over year to make sure that the organization is, has correctly done. Is there any opportunity to automate and or think about ways to kind of create a true continuous monitoring program for some of these things, so that you're not having to necessarily at the end of the year or throughout the year spend time going back through them and reviewing? Just didn't know if that's something that you guys had considered.
Well, I think we hope to do that when we have a internal auditor as well. But one of the things that I've tried to do over the years when I go through this, if we see opportunities to automate something, talk to IT, for example, on this actual versus scheduled stuff, we've got some, I get some we have some new reports that IT developed, which kind of improves the process to identify the exceptions. So, I mean, we do look at areas where we can automate, and I will try to get IT involved in terms of new reporting and stuff and things like that, which will expedite the process.
Good. Yeah, I think that's definitely important. And even thinking about some of these things and how if you can automate them or get them to a point where they really are kind of what we'll call continuous monitoring.
Right.
Putting those back on to the business units to say, ultimately this oversight is your responsibility. We might come in as internal audit and do an audit, once every couple of years, depending on the level of risk for each of these items. But just something to consider, so that might free, internal audit up to do some things that maybe are less continuous and more spot checks of processes that, might be areas of risk within the organization.
Yeah, the more we can turn over to the managers, for sure. Yeah, that's a very good goal in terms of trying to do that. And I think, some of the data gathering that I do for the GidWits Plus things could, should be automated, and that turned over to the Weinberg department to monitor.
Got it.
So, yeah, no, that's an excellent point, and something that we need to continually think about.
And then in terms of like when you come up with audit findings, and I read through these and you've got some great findings and recommendations, how are you tracking management's responses and then the implementation of any changes that they've made in order to address some of the findings and
Normally I would
recommendations?
just follow up with the manager and ask him about it, but
Okay.
we did, when we had a staff, I say a staff, when I was more than just part-time, and we had an internal auditor. At one point, we had 2 FTEs in internal auditing before some of the changes that happened, but we were able to, develop basically a tracking mechanism and do regular follow-ups with managers, and they would be reporting out what they did. And it was a more formal process than what we have now, no doubt about it. And that's something I think we have to look at reinstituting when we've got the program established again. We've kind of been over the last several years just trying to do, fires here and there, or seeing things that were problematic, rather than as an ongoing activity, with a formal reporting and process from the managers as well. So
makes sense. And happy to help with any of that. That's my business, what I do on a day-to-day basis. So happy to, sit down and think through
Mhm.
how we might be able to automate some of it. And honestly, even with Excel these days, there's some pretty slick stuff you can do that just, it's not going to cost the organization a
Right,
lot of
right,
money.
exactly. Sometimes, if you automate something that doesn't even, you could do it on Excel or something, it doesn't really accomplish that much. But
Yeah.
your point's well taken, and I think that's something we have to strive for as far as a mechanism for reporting and feedback from the managers and stuff on a regular basis, rather than me having to call them up and ask them.
Yeah, I'm a big proponent of shifting the responsibility back onto management, to, be responsible for those things, and then doing some monitoring of that, accountability to make sure that they're actually acting on those things. So,
Thanks, Jenny. That was a really good point. I think and thank you, Joel, for your report. Very informative. I think we've actually segued into the next agenda item, so we can continue this discussion. The next agenda item to me is twofold. It's risk management. And in my mind, when we're talking about risk management, we're talking about agency-wide risk management over more at the corporate level. So for example, I think of a risk, potential loss of revenue in a particular area. The federal government or the state has, I'm making this up, but has proclaimed that there will be no more of something. And what can we do about it? How do we identify that in advance, and how do we mitigate that loss? That's at one extreme. So, but we're also, I understand Dan mentioned at the last meeting that there will be an agency-wide risk assessment after a new person is hired. So I don't think we can really get too much into that right now. But one of the things I was hoping to do, and you can disagree, and that's fine, but to identify at a very high level areas of risk for this new person, because the new person, hopefully, and Stacy can speak to this, will be hired before we have the next meeting. So we might want to have, just some key points for that person to be aware of when they begin that role. The other part of this is the internal audit function, and that's what Joel was just speaking about. And where do we see additional internal audit functions that need to be performed, or in what areas they need to be performed? So Joel looks at, actual versus budget hours, those kinds of things. What other specifics should this new internal audit person be focusing on? And with that, I will turn it over to Stacy.
Well, I can, before the committee discusses, maybe give an update on the job postings and where we're at. We posted the Director of Corporate Compliance and Risk Management role, I believe, in December. The job, the person was in the role for 5 months, I believe 5 months. Resigned before Thanksgiving, so the job's been open for 2 or 3 months. So that's always painful to have an open position, but it's also a learning opportunity to figure out where this person was pulled into across the agency and where we want the person to focus. The person that had that role, I don't know, was in the job 25 years, a lot of years, lots of years. So that person was fixing the arms on office chairs. They were ordering office supplies. I mean, the job had just, you've been around forever, you just take on all this stuff. But what we want the person to do is be a strategic risk partner, right? Putting together a risk framework and assessments. So it's really been a good opportunity the last few months to figure out what some of these other items are that come to my attention, and working within the agency to say, no, that's the manager's responsibility. Like, that's the managers or facilities, like, we're trying to get things into the right place. So when the next person starts, they're showing up, and, there's always going to be things that come up in our jobs. But I mean, for the most part, we really want this person focused on compliance, policies and procedure and risk management. So it's been a good few months from that perspective. We have identified 3 candidates. I have an in-person interview at 45 minutes with somebody who's coming into the office. I think today we're gonna get it down to 2 candidates. Jenny has offered to interview those folks. I'm hoping it's 2, and I can let Jenny know by the end of the day who the 2 folks are. And I'm really optimistic that we can make a job offer next week. So that would be great news. But again, what we're trying to figure out is if we position this person up for success, coming in new to the agency, I mean, this agency is complicated in terms of all the many things we do. So I've had a cross-department interview team talking to this candidate, so the candidates have a pretty good idea of what they're walking into. I want somebody who is much as a good fit from a risk experience perspective as from a cultural perspective, and can they really partner throughout the agency? So I feel, I'm hoping we're close on that job. We also had a position, this internal audit position that was approved for the fiscal year 24 budget that we were close to talking to this committee about in November. And then when the director resigned, we said, we can't do that yet. So I think this is all part of the discussion here. We included in the materials the director role. That job was posted in December. The job posting was there. And then a draft of this internal audit position as it was drafted back in the fall. So, you know, I don't want to we're not going to go down the path of this posting until we have this discussion, hire somebody and really look at, I mean, I look at it all together, right? We're trying to figure out how to mitigate risk for the agency, whether we do that through policies and procedures, but I mean, we're all risk managers, right? Anybody that works for this agency is thinking about our executive directors, our managers within the community-based services. How do we mitigate risk to our staff and clients? That's what we do in the agency. I need somebody who's going to think strategically across the organization and really figure out what are those key areas, and then how do we go about mitigating it, with internal audit being one of those pieces. So that's how I think about it. Hopefully we're close on the director job and then can really push this framework forward. I don't know if anybody has comments, different thoughts.
Stacy, I have a question. It's if I hear it right, the director position, I think it's our compliance person, which is really the technical side of what we do day to day. We have to be in compliance with all these procedures and processes. There's risk management, then there's oversight of internal audit, right? If I'm reading it right.
Right.
As you look for candidates, those are probably hard to find someone that excels at all 3. We know on the compliance side that has to be right. That's different than financial risk. There's all sorts of other risks involved in terms of the compliance side. Are you finding people that you think bring a broad enough perspective to be able to bring something to the role, those 3 distinct roles? Or are we going to focus on one specific area and let that person come up to speed and learn to deal with the other areas?
I mean, it's a lot. I can't disagree with that. I think if I had to guess today that the candidate I'm most comfortable with is outside our price range. So that's going to be a conversation with Dan, right? I want all this experience. I want the person who can do all of this. But I think we're going to have to pay more than what we were paying before. I think, but that's a salary discussion. I think we can work it out within the budget, obviously working with Dan. I think it's going to need, this position is going to need a lot of my time. I think this committee's time, or my time, and the committee can work through me, but giving this person direction and guidance, making sure that, you know, I think about it, Michael, and I think there's a lot of people here already mitigating compliance risk, that do that understand the rules. So this person, to your point, though, can't be an expert in all this. Like they gotta fly high enough. They gotta know the details, but be able to fly high enough to figure out where we do have the risks and how we want to mitigate the risk, including compliance. So it's not an easy job. Like, I think, you know, when you do have internal audit, I mean, I think it's gonna take a lot of my time too.
Yeah, I think as we look at this person, the compliance experience and ability to oversee that role has to be the priority as we start going through it. You have to hire someone that
Yeah.
understands compliance. That leads to, could end up taking more of your time, because I'm not sure a compliance person is gonna have the insights on internal audit to be able to manage that.
I do have one candidate who's done both. I mean, I have
Really?
a candidate who understands compliance, maybe not an expert in all the areas, and has set up risk management assessments and frameworks.
Okay,
So I don't, go ahead, Jenny.
I was just gonna say, I think, Stacy, to your earlier point of this person doesn't necessarily have to be the understander of every single compliance requirement across the organization. They have to be able to establish a framework such that they can monitor that all of the various areas are understanding their compliance requirements, and they have programs, controls, processes in place to meet those requirements. So I think when I think about that, and again, I kind of come from this world, when you understand risk and you understand, you know, control, it all to some extent melds together. So it doesn't worry me too much about finding somebody who has every single piece of that component. Now, if there's specific areas, you know, like HIPAA or data privacy, those are going to be very specific needs. If that's a requirement, depending on, you know, what other skill sets we have across the organization. But I have, I guess, less concern with it being somebody who, you know, understands the depths of compliance that the organization is being held to, because really, again, that's the line managers. But I think it's somebody who can think strategically, who can set up programs, who can develop monitoring and mechanisms to be able to address all of those areas. And from an internal audit perspective, I think we probably need somebody in that internal audit role who is, you know, able to understand how to run an internal audit risk assessment and work closely with the compliance person. And maybe, I mean, from an administrative perspective, maybe that internal audit person is, you know, dotted line to the director of compliance. But ultimately, I think this group, as well as Stacy, is going to be responsible for understanding their internal audit framework and helping them determine where they should be focusing their time.
And one item, thank you, Jenny, one item when we were looking at drafting the role of the internal audit that Joel, the previous director, and myself discussed, is we keep talking about the need for a policies and procedure framework, right? We have policies across the agency. They're not in a place. There's no tool to make sure they're updated and checked on. So that was going to be a big focus of this internal audit new position. I still think, again, we need to do policy, you know, have the framework around policies and procedures, a tool, a way of monitoring, but that's just one piece of this overall framework, right? And how we mitigate risk. So I don't even, yeah, but that's policies and procedures was going to be a big part of this person's role.
Yeah, going through the audits and stuff like that over the years, we desperately need for every department to update their policies and procedures, because many of them just haven't been looked at in years. And without that, we're, you know, that's the building block of a program for corporate compliance as well as internal audit. So I think that's essential that we get that done as a major initiative for the agency.
And following up to what Joel just said, this committee in the past has discussed about the need for policies and procedures. Perhaps, no, hopefully centralized, in a centralized place, I should say, even though each department would be responsible
Right.
for its own, but that was postponed until a future date because of staffing issues. So
And I think a lot of
it's,
this
it's
needs,
aligning, it's
Yeah.
aligning exactly with what you all are saying.
and I think a lot of this just, it needs to get tied into agency-wide goals across the agency, right? This is just a few people in a department, right? But it needs to be on everybody's goals and objectives for the next fiscal year. Because it really is, it's, you know, it's relying on resources across the organization to do this right and effectively.
They see a little bit of a different question when we talk about the enterprise risk. Have you had the time yet to take a look at the Plant Moran study from 6 or 7 years ago to see if it has a foundation to give us a framework or not?
I mean, I think it is a good foundation, Sam. I looked at it briefly. I didn't dive into it. But I think, I mean, it's a framework. I think a lot of the risks are the same. I think it's a matter of, prioritizing them and figuring out not just the pillars, but where we want to start. But I haven't dived into it.
Yeah.
I really need some help to do that.
I think
Stacy,
it is a good framework. I've seen it. It's a pretty reasonable place to start. I think a lot of work was done to identify risks. I don't think it was I think the use of that study and an ongoing process to oversee these kinds of risks, figure out which risks you have to mitigate, which you can live with. I think that's where some of the weaknesses is just having somebody put in, we need a risk management process. You don't necessarily have to hire somebody that has experience doing that. That's something that people can learn. There's a lot of different frameworks. The only caution is stay away from anybody that shows you a framework that you can't understand the first time they explain it to you, because there's a tendency out there to overcomplicate these things. And at the end of the day, risk management can be a very transparent, very straightforward process. So I'm less worried about this person having risk management, because I think between Stacy, with you, with Jenny, who does this, and Sam and I and Sylvia, who have experience with this, we'll figure out how we deal with that, and we can help that person. I keep going back to compliance, and I agree with Jenny. This doesn't have to be an expert in compliance, but it has to be someone that can actually make an independent assessment of where are we really overall. And Joel has done some of that. Joel can be very helpful in terms of building a perspective on that. And once we have the perspective, then it's okay. Compliance is a risk like anything else. What's the mitigation plan? What do we have to deal with first? But I think the compliance person, not the one that just came and left, but the one before, was sort of the compliance expertise. Joel, is that correct? That was the person that really brought the expertise to the agency and could oversee it.
Developing a lot of policies and procedures in this area, correct?
Yeah, so I think management should develop policies and procedures, but we do need someone that is experienced enough so they can look at the compliance area and have through their experience a sense of, okay, where are the priorities here? What do we need to do? So my priorities are compliance in terms of experiences is must have. Internal audit would be nice. Risk management, again, I'm less worried about that one, because we can figure out. We can train a risk management person. And it really is, it really is putting together a process and then engaging Dan's entire management team and the board in that process. And there's some, again, there's, Jenny, I think you probably have some, the last thing we did at UL was incredibly straightforward. You could understand it. And I remember we brought in, I think it was Deloitte at one point, and I sat through a meeting and it's like, this is nuts. You can't,
Yeah.
if you can't explain it to everybody in the company simply, it's useless.
Nope,
And I think
that's
developing,
up to you.
yeah, we can develop that.
Exactly right. And honestly, having a catalog of your risks and then sitting down, a lot of times we'll just do live voting sessions and get all the heads of departments together and do some live voting to understand like, okay, what are the highest priority risks? And then, as a management team and a board, you determine what those highest priorities are, and then you find ways to monitor them. And it's not complicated. And I think of compliance in a similar vein in that you need to catalog your compliance requirements across the organization and then have methodologies to ensure that there are processes in place within each of the departments to monitor and ensure compliance with those compliance requirements, right? So it's building a framework, and part of that is policies and procedures. You can't expect people to comply with things if there's no documentation of how and what needs to be complied with. So, yeah, I think you guys are on the right track with finding somebody who can do all of that.
They see a related topic that at one time Tom and then Nancy Harris were very active in, is the program we have. I think it's called Community Care, and we make equity payments, and then it's a pooled concept. We probably already know more about it tonight, but it seemed like there was a fair amount of details or things that had to be managed or work with them. I know they handled our claims. Now, perhaps a lot of that went away with Lieberman, and it's not as much of an issue. But are you familiar with it? Is that what it's called, Community Care?
Oh, care communities, yes.
Care
So our
community.
insurance provider, liability provider up at that has Weinberg and affordable housing. I mean, the good news is most of those claims have been settled. There is one outstanding claim at Weinberg from 2020 that we just got an offer that we get involved with. I mean, it's really the insurance company negotiating, although we're part of that. We've got a deductible of $100,000, and then anything up to them, anything over that is the insurance company. But we are down to, I don't even want to say it out loud because you never know what else is coming, but all the Lieberman ones have been settled. And then we have one fairly large one at Weinberg that's fully reserved at $100,000 that needs to be negotiated. So yes, we are working with caring communities. And when I first started, even in May, I was on multiple calls on these old claims, and all those, for the most part, are gone.
Maybe and most of it was obviously Lieberman was the major activities. So maybe the question is, what is our relationship with them? Is it we still sort of need the same relationship? I mean, it seems like they have some money of ours, and I don't remember all the financial details, but I'm wondering if we should take a look to see where we stand with them, given our new risk profile.
Yeah, I mean, I do think a lot of their program is about mitigating risk. So I can't say how much we haven't had a claim in Weinberg in the last 3 years because we have caring communities, but they do have a lot of proactive risk management around assisted living. And they come and give us advice at our falls meeting where we review all the falls. And I mean, they're really much more of a partner than when we had a liability issue at Tamara's, and I never heard anything until it was send me a check. Like, I don't even know what happened behind the scenes, which is, it's much better to be part of the process to figure out how do we stop this from happening again. So it is just I've never had it before, this relationship with an insurance company that is all about, hey, you can call us and bounce ideas off of us, and we're not gonna send you a bill for $5,000. So I think there's a lot of benefits to having them, more to keep those risks mitigated going forward.
Is the relationship directly between CJE and the insurer, or is this another relationship that came about through
It's ours.
through the Federation?
It is a relationship that Dan has. I don't know if anybody else in the Federation uses caring communities, but it is a relationship between
No.
CJE.
Yeah.
I think it's just CGAE.
Okay,
Yeah,
I
most of this-
was under the misunderstanding that it was a federation.
Yeah,
Yeah.
So you do have.
Yeah, use that. I mean, that's, all insurance companies should be doing that because inherently that reduces their,
their risk.
so, and I would say, even if they aren't forthcoming, if there's areas that we have questions on, we should reach out to them because they typically have really great risk managers across their organization.
We didn't have luck on this last time around, but thankfully knock on something that's been like our only experience. So my only experience, so maybe we could get a different support next time. But I do think caring communities, just the way they access the information and then they analyze a bunch of information across their portfolio and then they give us that feedback. It's really good analytics that we get from caring communities about what's happening across assisted living. They'd love to get into Tamara's too. They have independent living as well, but so I think, and Dan probably has a lot more history here, Sam, so we could follow up with him too on that discussion.
Yeah, I know he dealt with them in Cincinnati before he came to CJE and
Oh, I didn't even know that.
yeah, I believe so. Yeah. With his former employer. Yeah. Or maybe it's Tom, maybe I'm confused. We had a lot of Cincinnati people. So
Yeah.
one of those two had worked with them in their prior company.
I think it was Tom, I'm not positive.
Yeah, I think it probably was Tom, now that I'm thinking about it.
Are there any other thoughts on risk management? Okay, how about areas to focus on an internal audit? Are there any thoughts on that?
I know there's not been an enterprise risk management, like an enterprise risk assessment, but have we done kind of an internal audit risk assessment in the past couple of years?
What does that look like, Jenny? What do you mean by that?
It typically is looking at, the various organizational areas and just kind of defining the processes that they undertake, and identifying if there's processes that, have significant risks, whether it be financial risk, operational risk, compliance risk, et cetera, and kind of coming up with a plan of, okay, here, very similar to an enterprise risk assessment, but a little bit more focused on, internal processes, and determining, okay, these areas are things that maybe we should look at every 3 years. These are things that we should look at every year. These are maybe hot topics in specific years that we should consider. So it's a lot of times we think about it as the similar taxonomy of an enterprise risk assessment, but it's a little bit more finite on where should internal audits spend their time relative to the risks of the organization, and things that they should be kind of focusing in on. And some of that is over time as we, build out the policies and procedures and the controls and even like the catalogs of the various, organizational processes, we can sit down and think through how do we do that?
We do these every year we update these internal control processes per RSM. And we don't get feedback from them in terms of, what are really our risk areas. So, we go through the walkthroughs and discussions with them, but we do not have a general agency internal audit. Where should we be focusing our attention on?
Okay. That makes sense, and I think that's something that we can think through, how you build that somewhat in conjunction with the enterprise risk assessment. Because it's typically, you know, a subset, and it's good to do it at the same time, so those taxonomies are similar, not like, okay, your internal audit risk assessment looks very different than your enterprise, so.
Makes sense, Jenny.
Yeah, it makes a lot of sense. Good thought, thank you.
Have we thought through, like, when we think about an internal audit, sort of what percentage of that department's time would we want going to normal accounting, financial? What part would go to operations, and what part would go to other risks that come out of enterprise risk management where they can perform service? I don't think we've done it. I think it's something we're going to have to explicitly do, because with Joel being the sole resource, it's like, okay, we got 6 hours a week. We got to get this stuff done. As we go forward, just coming up with a perspective on where's if we looked at these as fires, what's controlled in an ashtray, what's in the garbage can, and what's burning the roof off, in terms of where we focus the attention. It's hard for me to sit here and say, I think you should work on this area. I think you should work on this area, because I'll come up with the standard stuff that you find in like the RSM report. Well, the key risk areas are collections, reserve for bad debts, But I think this committee, working with Stacy, you and Joel, and could sort of try to get a sense of where do we want that focus to be? Where's the most urgent area to focus the resources we have? And I don't know the answer, actually, because we really never get into it in a way that lets me organize my thoughts. And Jenny's new. Joel may have a perspective on this because you've observed this for a long time. And Sam, I think you're new coming back to this too, in terms of the audit committee. Although you've been on the board for, I think, since 1841, right?
June, yeah, June, that was my, right.
I met Sam in 1839, though, so
Oh,
that's
boy.
okay.
Michael, you literally just explained the exact reason why we should come up with, and it doesn't have to be overcomplicated, some way to do an internal audit risk assessment. That is the very
Yeah.
starting point of how you organize, okay, where do we spend our time
Yeah,
versus just throwing spaghetti against the wall of, I think we should do this, I think we should do that.
yeah.
So how do we
Great.
develop this framework?
I got about
And
1,000
that's
of
that.
them in my email that I'll just start sending. I'm just kidding.
Say that again, please.
I said I've got about 1,000 of them in my emails. I can just start sending them over.
Oh, well, 1 or 2 would suffice.
Yeah,
Can
no,
you
it's
summarize it into one email?
all right. It's not that complicated. I think it really is just sitting down and understanding the breadth of the organization, what the various departments are responsible for, and then, you know, assessing within each of those departments, what are the key risks and what is already being looked at in some respect. So, you know, you've got the auditors coming in on an annual basis to do an audit of the financial statements, not that we want them to find things that through the audit, but you got some eyes on that. So maybe we consider, okay, you know, that's where you start to think about what's the inherent risk and what's the residual risk, what types of controls are in place throughout the organization that would mitigate risk, and how, you know, how do we feel about those controls? Do we feel like they're actually being executed? And then, you know, from there, we kind of come up with what's the residual risk of the various areas, and we can come up with ways to quantify that.
Yeah, I think we need that I mean, I think that's a very good objective. But we do need management participation in this. I don't think we
Oh,
can just
100%.
For sure.
Oh, yeah.
somebody out there and figure this all out. I think we've got to develop a template and then we can maybe hopefully roll it out to the various departments and get the input from them. So I think
Yep.
it's all in the template.
100%. You can do surveys. You can have like a big meeting. There's a lot of different ways to do it. But I think it sometimes it's just starting, right? It's just getting some things down on paper, and that helps.
Yeah,
Well,
but maybe
this
we
is where I
can have
think
a
it goes back to
discussion.
putting it in goals and objectives throughout the agency, right?
100%,
Because there's a
yep.
lot of conflicting priorities, as we know. And people working really hard on a lot of different things, but we need to get started here. And the easier we make it, the better. And we're doing a lot of things. We are doing a lot of things across the agency. But there's places we need more focus.
Yeah, and I think our intent is takes fully into account, there's a lot, there's so much we could be doing here. And being reasonable, coming up with a reasonable way to attack it so that we don't want to kill people by saying you got to do this. You know, Stacy, I want a full SOX implementation by next week. You know, I mean, it's not, you know, it's, we want to be reasonable and work with management and saying, here's sort of the priorities. Let's do this and this. We don't have to be Olympic gold medalists to start. We just need to just get started on it, figure out
Yeah.
where we think the biggest issues are, and over time we'll get there.
And educate them too.
Yeah.
Like, you know, a lot of people do risk management on a day-to-day basis, but they don't even realize they're doing risk management.
Right.
So if you help them understand what risk management is, they're like, oh yeah, I do that. So that's part of it. And that's easy. I mean, when, you know, helping them understand how they are mitigating risks.
Any other thoughts? On either
You-
risk management or internal audit?
You ask, you get me rolling on risk management, and you're never gonna get me to shut up, guys.
We really appreciate your perspective, Jenny. Like, I
Absolutely.
think you're gonna be so critical in helping us define something that, even with a new person, right, that makes sense. Can have a multi-year plan to move
Mhm.
forward, get started, get the organization on board. It's not
Yep.
gonna be done overnight, but I really do. I'd feel better if we knew where we should focus.
Yeah, and to Michael's point, it's gotta be fit for purpose. Like, we're not gonna build, you know, the premier risk management program for every, that, you know, you would see at like a bank organization. We need to, it's gotta make sense for CJE.
Yeah,
Okay, thank you. We move on to other business. On this agenda, what we call is open discussion. Any other topics for discussion?
I just had one. We are finishing up the 990, which will be
Oh,
done
good.
in the next couple of months. I don't believe that the 990 has come to this committee for review prior to issuing, right?
I have reviewed it. I can't recall on which committee.
No, let me just interject. The audit committee has
Well, that's
reviewed the
later.
990
That's after
draft.
the committee, yeah.
What, Joel?
The audit committee has reviewed the 990 draft before it was issued.
So then that comes into play when we're
That
done.
was in May. That was, we usually had a May meeting just on the 990.
Okay, we may add one or two more agenda items this year, possibly.
But that should be approved by the audit committee.
Thank you. I, like I said, I couldn't remember which committee reviewed it.
The 990 is due May 15th, so it has to be earlier than that.
Unless we file for an extension.
That's the last extension.
I forget for our fiscal year. Thank you. I'm used.
We got our extension.
Yeah. Calendar year, sorry.
It's not
due-
the extension.
Due May 15th.
Okay. That used to be my original due date.
So that is one
That's
open
right.
item that we need to figure out as we,
So how soon will it be available for a review? How soon can you all put it together?
April?
I think we have no chance by April.
So
You might
early
think
May, should we try to shoot for?
End of April, maybe?
End of April, last week of April, first week of May?
So I'll have Jeanette send out a poll to get something on the calendar for the last week of April. Does
Yeah,
that,
the first week of May, it's due, isn't it due like May 15th?
May 15th doesn't give us much time to react to anything now. If we,
Right.
I think, I mean, we'll be done by end of April, right?
We can get a good time frame by the end of this week where it'll be, so
Okay.
we could even release next week, so maybe give us until the end of the week to get a good
Okay.
time frame.
So once we do that, then we'll send out the doodle poll.
Yeah.
Great. That's all I had. I mean, it's not for the audit committee necessarily, but we're going through the budget process. Sam and I reviewed the timeline. That's also, this team is working a lot to get us ready for that, the budget process. None of us have really been through that. We're kicking it off. Well, we've already kicked it off, and then Monday, the tool will be available throughout the agency for the budget.
Yeah.
But it
We-
does
we-
tie into the conversations we were just having around, obviously, around expenses, and how do we pay for this next year, all that.
We also had a meeting with RSM a few days ago. I think we should just mention that we came up with, so hopefully some ways to move up things so that it's not as late. And move up some of the preliminary work and to review the number of audit requests we get and try and kind of ensure that it's really what's needed. So yeah, I think it was a good meeting we had with RSM a few days ago, and there is a new partner, but we need to obviously make some changes and hopefully some of the way we organize the audit. So I think the partner, Frania, or the senior, is gonna be involved again. So she's attuned to some of the points that we made with them.
And wait, did they make her a partner?
She's a non-equity partner, same responsibilities without the equity, so I don't know. That's what we were told on the call last week.
Okay.
I'm glad you brought up RSM. I think we talked about, maybe it was last meeting or 2 meetings ago, the committee eventually would like to go out for bid on the audit. We have 1 more year with RSM, so there's gonna be no change this year, and the Federation is actually going out to bid as we speak. RSM has been there, I don't know, maybe 40 years. I could be, used to be something else, like many years. So they're in the process now of going and look. Now, that doesn't mean we have to switch to whoever they pick. But they're going through the process, a year before this committee would like.
They have to bid everything every 40 years. That's, I think, the policy.
I really think they said 40 years. Maybe I'm by 10, I don't know.
Yeah.
RSM has, I mean, the thing about RSM that always bugs me is they always come back and they've never, as long as I've been here, which is only 6 years, I think, like any recommendations. It's like, I know we're good, but it's just, I've never seen anything like this. And you ask them and, well, you didn't really find anything. So, I think sometimes you find a new auditor, they come in and they help you figure out where you need to focus. I view management points as helping us figure out where to focus, not as a condemnation of who we are. And maybe we can find somebody that even for the same amount of money, we get a comfort they're gonna be a better partner on some of the other things we're trying to get done.
There's definitely pros and cons. I mean, I think the downside is it tends first 2 years with a new auditor is painful just because it takes them time. Not to say that we don't want to go through that, but I would say, I think this year, let's kind of test them in that every meeting, and even if it needs to be a note from one of us as the audit committee members to say, hey, we want feedback. And I think that's, something that, especially with a new partner, if we push, this is our expectation that you're providing some feedback, and that's going to be something that we consider as part of your evaluation. And sometimes I feel like they're nervous because they don't want management. If they're smaller things, they're like, oh, well, we don't want management to be upset that we've, told the board, but I think we need to help them understand that this is a collaborative board and management, and that it is helpful to get that feedback so that we can help identify areas of need. So I would say this year, if we just really continue to push them on that and see what they are able to produce, and then we can, evaluate.
My impression from the last meeting is that they felt that they are providing that feedback, even though we kept pushing.
We get a lot of feedback. Staff to RSM. I mean, they were, in some ways super helpful too.
Oh,
Getting
yeah, I mean,
a
you
brand
made
new
that clear, you made
team.
that clear in that meeting.
But I don't think, we work through a lot of
Work them,
different
yeah.
items together. But to your point, it's not making it up to the discussion this week.
As a tangent to that thought about the audit, when is our planning meeting with them?
I'd have to look back at the calendar. Joel, do
Because
you
I
know
would
when
think
that?
that it would be before year end.
They said they'd get back to us in April. We actually, meeting last week, they had to start getting back to us, looking at their schedules and getting back to us in April, because I think Joel had requested an earlier planning session.
Joel?
I'm sorry, I didn't hear that.
What is the audit planning committee meeting with this committee? I thought it was after it first started, maybe it was
No,
the beginning of
we,
June. last year.
it used to be June and then it got delayed till July, but the audit planning meeting normally is taking place in June.
I'm wondering, well, no, no. I was wondering if we could combine that with our next, with the 990 meeting.
I don't think the timing.
Okay, that's
So we
fine.
could keep the
That's
990
fine.
to 30 minutes. I don't think it's.
Yeah, I mean, depending
What?
on when we can do the
Could
other.
ask, so.
Please keep it to 30 minutes.
I'm sorry,
Okay, so
what are you
maybe they will
saying,
be.
Michael?
I said, please keep the 9990 review to 30 minutes. 'Cause once you hit minute 31, you're like, you're over.
Elaine raises a good point. We can ask RSM, can we do it all at once? Because I
Yeah.
remember that planning committee meeting
Yeah,
was
I remember
very
you were
really
there.
high level.
Yeah, it's very high level.
Yeah.
Okay,
They go over the same key risks of what they're gonna look at every year, which don't change.
Right, and the schedule, the time schedule, et cetera.
okay, good feedback.
Motion to move to,
Can we
In the
move
meeting?
to adjourn? Is that what you're saying, Sam?
that's what I was saying. You said it better than I did, but that was what I was looking.
I don't believe it. Okay, motion to adjourn, Sam?
Moved.
Second,
Second?
Jenny, it's up to you.
I'm good. This was a great meeting. Thank you, guys.